Shareholders also have a vital interest in the ethical conduct of the company. It has been proven that investments in unethical firms can have abnormally negative returns for a prolonged period. Some research notes the positive relationship between overall financial performance and emphasis on ethics. The financial performance among different firms of the same size is better in those companies that have and observe an ethical code. And last but not least, in this aspect, we have to be aware that there are many institutions as well individuals that are consciously seeking socially responsible investments. So they are not only considering the profit percentages, also the activity of the firm. Shareholders actually holding their financial share in the company have also had a positive impact on the ethical shape of the company, protesting against extremely high pay rates for bosses. Some of the shareholders were active in protesting against investment failures and price fixing scandals. This activity of shareholders has had a very positive impact on the whole company because it makes it aware of some risk that it was running. This has protected companies from paying penalties for their activity and sometimes saved them from bankruptcy. Le Byron's book about modern slavery shows that without the engagement of shareholders, the chances to distribute value among suppliers and the supply chain more fairly are very limited. Shareholders or owners have a definite possibility of impacting on the redistribution of the value lower down the supply chain to achieve fair wages. Suppliers and competitors are also challenged not only by their consumers and employees, but also by other more ethical companies which the company is supplying or to which is a competitor. Let's start with competitors. The existence of them is crucial for ethical position of the company. In the case of monopoly or hidden monopoly, the company may create the rules of game and it can lead to many ethical problems, like for instance unfair wages at the end of the supply chain. Moreover, the prices of products in monopolies are higher, so customers face higher prices and profits remain in the company. Eventually, such a situation has an impact on value distribution between customers and investors. The presence of competitors who offer fair work conditions and much higher wages than other companies like Walmart for its employees may challenge a company to adjust a higher moral standard. About suppliers, there's a great problem of supply chains. The position of the supplier in the supply chain may limit the range of their movements as mentioned before. The supplier forced to lower production costs given the choice to go out of the business or remain, engaging in the non-ethical, non-moral behavior. To sum up, there are different participators and institutions in the market which impact on the ethical awareness of the firm and on its actual behavior. Firstly, the structure of the market, which may lead to injustice, for instance for workers, if not regulated. Secondly, customers who may choose to consume more ecologically or in a socially fair. However, their impact may be limited by their income, which may result in instability in the structure of the market. Thirdly, there are employees who may require information of the company through Glassdoor or by joining movements and so choose the ethical company. However, their choice may be also limited, especially in times of the falling power of trade unions, the precariousness of the work, etc. Investors or shareholders may also be more careful about their profit expectations, and probably they could expect less on the condition that wages will be higher, and so evade the scandal of modern slavery. Finally, there are suppliers and competitors whose potential to impact the company depends on their position in the market and especially in the supply chain. In the following movies referring to social and governmental drivers, I will focus on other stakeholders like government regulators, non-government organizations, and the immediate community. Some voices consider the environment as the stakeholder. Its interests can be supported by the market, consumers, employers, suppliers, competitors, government, European Union 2020 strategy, Sustainable Development Goals 2050 as examples, and society, Greta Thunberg or other social movements and trends. What is your attitude to these issues? Do you try to impact on what is being produced by your consumption style? Do you use your impact as an employee? Are in your company's trade union? What is their activity? What limits do you experience here? Do you know some investors or owners who use their power to influence the actions of the company in ethical direction?